In terms of your share price, right? You've been hit this year. It's down on where it was. Are people just not buying your strategy, or are people not understanding what rare earths is and where it fits in the market? So share price appreciation is going to come from what? How do you make money so that I can make money? What are investors thinking? What should they be thinking? Hello and welcome to our viewers on cruxinvestor.com, also to our listeners on Cruxcast, our podcast series. We're here today with Dawes. He's the CEO of Mkango. They're a rare earths company with assets in Malawi, I believe.
Yeah, so we're focused on rare earths. Our key project is in Malawi. And rare earth sector is at a very interesting stage at the moment, in that one of the key demand drivers is from electric vehicles. So we're looking for very strong increases in demand in coming years. Our project's an advanced stage project. We've been working on it since 2010. We've taken it through various stages, and we're currently doing the feasibility study. And that feasibility study is fully funded by TSX-V, which is a subsidiary of Noble Group. So we're looking to get that feasibility study completed next year.
So got to start with, what are rare earths? There's a lot of confusion.
So rare earths is a suite of 17 elements, and they're used for different applications. As I mentioned, the key growth area is really the key demand driver is in electric vehicles, but also other clean tech applications, also consumer electronics. So neodymium, for example, and praseodymium, they go in to make magnets, which go into electric motors or into wind turbines, or small magnets in hard disk drives and other sort of consumer electronic applications. Speakers, for example. So that's neodymium, praseodymium. Dysprosium is also used in the magnets, and terbium is used in phosphors, also interchangeable with dysprosium for magnets. Cerium in polishing powders. So there's a huge range of applications.
Right.
Fuel cracking catalysts for lanthanum. But yeah, so there's different markets, different growth areas, but really the interesting market going forward is the use in magnets.
Right. So, read through your presentation, you talk about, recent increase in the resource. What are you digging out of the ground? Are all of those chemicals you've just mentioned, or are you focusing on specific components? I think the market's kind of confused. People talk about rare earths in very generic terms, but what precisely are you taking out of the ground?
Well, they come as a package. I mean, normally, every rare earth mine has the whole suite, just in different proportions. So our project, for example, is more geared towards light rare earths. Other deposits are more geared to heavy rare earths, and they're effectively different markets, different demand drivers. So when you're mining a rare earth deposit, the ore that comes out of the ground contains the whole suite, and then generally you concentrate that ore, you produce a concentrate, and then you chemically process that concentrate. Then ultimately you separate the different rare earths.
Right. Okay. Can we talk about your strategy? Because you mentioned the company TSX-V a second ago. You've been working with them for a couple of years now, or about that, and coming up for that. So, what's the relationship with them? Because maybe start with the projects that you've got and what their involvement, TSX's involvement is with you.
So the relationship with TSX is a subsidiary of Noble Group, and I think the relationship started during sort of 2016, around the time when we came to list in London. And at the time, our stated strategy was to bring in a partner to move the project to the next level and fund it at the asset level. So the relationship with TSX, it started off as a marketing and advisory type relationship, and so that was announced in 2017, and it developed into an investment in the top company level, and then into the sort of strategic partnership. So the relationship has grown over the years, and culminated in the transaction we announced, whereby TSX invested at the asset level.
Right. And so can we get into that? Because that's, $12 million Canadian, I'm presuming.
Pounds.
Yeah. It's 12 million pounds. Yeah. Sorry, it is 12 million pounds. At the project level for Songwe?
That's correct.
Right, okay. So, and what does that mean for you?
So really, I mean, previously, in fact, since we first listed on TSX-V in 2011, and as is normally the case for, in the exploration sector, you go to the market, you raise the capital, you invest the capital, and move the project through, up the value curve. Now we were getting to the stage we completed a pre-feasibility study in 2015. So we were, looking at ways we could fund this through to development stage.
Yeah.
And around the time 2016, we were a Canadian company listed in Canada. We needed to broaden our investor base and profile as well.
Yeah.
So we were, apart from listing in London, we were also been looking for a strategic partner who could come and move the company to the next level and to fund it at the asset level. And that's pretty key. It meant and means that we don't have to go back to the market and dilute the shareholders at the top company level. Right.
So, but was that always the plan? Or is it out of necessity because of market conditions?
I think that was the plan. That was the strategy at the time. I think what we needed... there are a large number of rare earth companies who were listed at the same time we came to market. I think that the number that everyone talks about is there was 200 rare earth companies listed, listed globally, and actually very few of those companies got their project to an advanced stage, i.e. a pre-feasibility stage. A rare earth project takes a lot of time and energy and money to get it to that stage. So really our goal was to get it to an advanced stage and to and then bring in a strategic partner off the back of that pre-feasibility study.
So the idea is what? You were set out to be an incubator, do the exploration, work out what you had, and then bring the strategic partner in, investment at project level. Yeah. That was always the idea.
And I think Talaxis bring a lot more to the table than just the funding. They've had a long-standing presence in Asia and network of relationships and marketing. Through the broader Noble Group, fantastic network. And in fact, before this transaction with Talaxis at the project level, we spent a lot of time with the group in Asia, I think both parties could see the benefit of working together. So it's not just a purely financial relationship. We're also working closely with Talaxis to identify the best markets for the product, the best type of products to produce. As I mentioned before, there's various stages in the value chain for rare earths. So whether you produce a concentrate, separated rare earths, which separated rare earth you produce, downstream products as well. So that's another area we're looking at is the downstream side of things, so technology.
So I guess you have to go for a strategic partner. You can't go for dumb money per se. You can't say, just give me the money, we know what we're doing, because you're a small operation, low overheads, and you don't have all those necessary skills or the abilities to open doors yourself. So it would have to be, how many people could you have gone to?
I think I think there's a number of groups that really it's the consumers of those rare earths. It's the groups who sell and market those rare earths, and it's groups who see the potential in the sector, which I think is very, very substantial. So. I think we're seeing a sort of structural change in the commodity markets where, when I first started working in this sector, everything was about bulk commodities, and the market was driven off infrastructure development in China, and that was really driving the markets. Now I think things have changed very substantially, and it's more clean tech, electric vehicles, and that demand is met by a different commodity suite. But it's a lot more specialist sector, and they're smaller markets.
Yeah, the smaller markets, higher margins, absolutely. But we speak to a lot of companies, who wrap their story around the EV revolution that's coming, because that's what's hot at the moment. And I'm trying to understand what's real and what's not, because of all the companies we talk to, they've got to say, you do it to a degree in here. You have to spend some time talking about the macro, for people to understand what's happening with the EV revolution right before you get into your story. Is that frustrating for you to have to educate the market? A small company like you having to educate the market as to where you fit in it. Do you think this is just not that understanding there anymore?
I think it's the same for. I think what happened in the sector is, the commodities that really benefited initially from this, from the whole electric vehicle story was lithium, and then cobalt.
For a while. Right.
And then rare earths really sort of lagged behind to a certain extent. And I think that's a reflection of a couple of things. It's a difficult market to understand. I think the rare earth sector went through very difficult times after the sort of real rare earths boom in 2010, 2011. Large companies got into difficulties. Those large companies were backed by some of the big banks. And if you look at the lithium sector, for example, a lot of the bull market was sort of underpinned by some big research and a big push from some of the big banks and coverage from them. So I think in the rare earth sector it's slightly different. It's more complex to understand. Because it's a whole suite of elements, and some of those elements are driven by, the electric vehicle demand. Some of them are driven by different demand sectors, and it takes time to understand the market. And I think so. It's part of our job is to, spend time with the potential investors to get them so they have a better understanding of the market and the sector.
So, but do you feel like the institutional guys don't really understand it? And plus it's not a very big sector at the moment. There are easier mining stories and commodities to understand. Retail definitely don't understand it. Do you feel that you're almost being penalised because of this lack of understanding in the market? Like in terms of your share price, right? You've been hit this year. It's down on where it was. Are people just not buying your strategy, or people not understanding what rare earths is and where it fits in the market? What do you think that is?
I think, just by example, you have, just looking at the Australian rare earth sector. Now Australia has a producing, a major producing rare earth mine, Lynas Corporation. Yeah. It's the sort of, it's the Western listed major.
One of.
And so I think there's a better understanding in the Australian market, for example, about the sector, and the companies trading in Australia of 30 to 100 million. So I think that is reflected in that knowledge, and greater understanding of the sector is reflected in the market values. So the UK is it's a very small sector from rare earths. I mean, Canadian sector was, I guess, one of the starting areas for the real rare earths boom. We listed there in 2011 for that reason. But a lot of projects, I'd say, came to the market and they were just too big. To build a mine for $1 billion in a small market just doesn't make sense, and it still doesn't make sense. So we set out from the beginning to have manageable capex, low capex. So PFS capex was around 216 million. So we've always kept to that sort of number of thereabouts. I mean, depending on scale.
So I want to come back to the question though, in terms of what if you think the market is judging you fairly. Okay, so if I look at another rare earths company listed here on AIM, which is Pensana, the project down in Angola, no one's listening. No one cares, right? And if I look at some of the chat rooms and forums about on the TSX or here in London for you guys, no one's talking about it. And that's why I'm trying to understand why, because they should be excited, right? You'd say yes.
Absolutely, yeah.
But they're not. They're not talking about you, and they, I'm wondering why. Is it because it's too complex a story, and there's other easier stories to understand? And do you think that's fair?
Look, I think that I think we are very undervalued in the market. I mean, you just have to look at the the implied value from the Talaxis transaction and the option. So Talaxis have a development option whereby they can increase their stake by 26% by funding the equity and arranging the project finance. So that puts an implied value on our residual 25%, for example, of 100 million. We're 10 million or thereabouts. So the upside is clear. We are going through a feasibility study at the moment. So it's I say compared to last year when we were putting out drilling results, it's I'd say the news flow is not going to be drilling results because we finished all the drilling. So I think what investors like is news flow. So I think it's up to us to really generate that news flow and excitement as we move through the feasibility study.
I mean, when I was researching this, you definitely have a lot of news flow. It's just very technical. It comes back to, do people understand what you're doing or what you're talking about? And if they don't, I can see why they perhaps aren't, putting the money down. And is this just a boring phase that you're in, pre-fees, before you can actually say, well, this is what it means for us at holdco level? All of this work happening down at project level is good for us. We should be 10 times what we are, or whatever number you're going to throw at me. And if so, when do you think that moment of clarity is coming for retail, high net worth, family office investors, perhaps not quite as sophisticated as institutional guys?
I think that we've been through that drilling phase, as I mentioned before. The stage is, as you move through the feasibility stage, metallurgy is a key aspect of it. Yeah. And metallurgy will comprise the flotation and the hydrometallurgy and the separation. Recovery I think rates. As we announce those various stages in the completion of the feasibility study, those are key milestones. I think they're as key or even more key than the resource that we put out. The resource, it's we've increased the resource very substantially. We have a measured resource. So the drilling is done and we've de-risked it from a geological perspective, and now it's the metallurgy, which is the next sort of key thing that we're
totally, in terms of recovery rates, etc. I mean, I'm trying to understand from an investor's point of view what they're struggling with here, and I wonder if it's the volatility of rare earth prices in the marketplace, up and down, or battery metals in the marketplace. Cobalt should be off and running. It ran for a while, back down. Lithium, back down. Nickel has, starting to recover, but will it last? It's it's famously volatile commodity. Do you think there's that element to it where you're saying we can't give certainty over the flavor of the month for battery metals? We haven't yet been able to give you a sense of the economics here as a result of that volatility, but also as a result of we haven't nailed down precisely what this thing's going to cost us to get into production. Do you think there's that level of uncertainty?
I think as I mentioned before, there's the market side of things. So in the rare earth sector, and really we're talking about the prices for neodymium and praseodymium. If you look at the demand driver I mentioned is electric vehicles. there's a few million on the road at the moment. I think it's about 3 million. Assuming a growth of to 30 million over the next few years, around a kilogram of rare earths per electric vehicle, additional 30,000 tons of demand, which would approximately double rare earth demand. Now, that demand hasn't really kicked in yet. You've got, say if it's 3 million electric vehicles on the road, it's a fairly small contributor in terms of demand. So I think that has yet to impact positively on rare earth prices. So there's that aspect to it in terms of the market. But the fundamentals are there. 90% of electric vehicles use rare earth permanent magnets. So there's the market.
Yeah.
In terms of the project and news flow, to complete a feasibility study for a rare earths project, there's many different components to it, and for us, it's a question of just getting those different components done, and certainly on the metallurgy, getting the news out there. And I think that those are the key milestones that investors should be looking for over the next few sort of weeks and months, leading into the feasibility study.
I mean, one of the other things I've noticed here, and just staying on the cost side of things, is it's a nice friendly country, been there, very nice people, nice part of the world, but you're reliant on railway to port, railway built by and owned by who? Is it state owned? Or is it Chinese owned?
The Malawi government has an allocation on that line.
Right.
And in reality, what we're looking at for the project is actually bringing reagents in, which is where we need the capacity, because we'll actually be producing a pretty high value product from Malawi. Yeah. So, say for example, order of magnitude around 50,000 tons of reagents we'll be bringing in. This isn't an iron ore project or a copper project. It's not a huge amount of material to be moving on the railway line. So we bring in, say, 50,000 tons of reagents, which will be sulfur, caustic soda, calcium chloride, and what we'll be exporting is 5,000 to 10,000 tons of high value concentrate. So we're not. What the infrastructure is important for is, we have a road to the site. You've got the railhead. New dry port being developed around that railhead near Blantyre, capacity on the railway line. What it's important for is that we can do more in country in terms of processing that our peers might be able to do.
Right.
So instead of just producing a mineral concentrate and shipping it out, and which means you'd be very limited as to where you could process that. Yeah. We can produce a mineral concentrate and then do further processing of that mineral concentrate in Malawi, add further value to the product, and it means we can produce a purified mixed rare earth product, right? And that product will be exported from Malawi. And we're also looking at potential locations and opportunities to further separate that concentrate into the individual rare earths, which again broadens where you can sell the product. Yeah. And that means the ability to leverage more off the relationship with Talaxis and the Talaxis Noble network. Right.
So I mean, again, I want to come on to that because I think that's kind of interesting about the way that it's going to operate. Is there's things like power, water. You say there is a dirt road to the nearest town, right? Is it a bit more than that?
It's so we've got a paved road to within about 13 kilometres of the site.
Right. Okay.
And the rest is a sort of gravel dirt road.
Right.
And in terms of power, we are looking to put in place a solar facility, solar storage, right, and then grid power as well. Right. The government has said and is supportive of putting in, first of all, of refurbishing that road, and upgrading that road, okay, good, and connecting the power line. The power line. So
was that a VRFB solar storage?
Yeah, it's solar storage. You know, I mean that's what we're doing at the moment. We're looking at all
You
the
pay
options.
for that.
Yeah.
Right. Okay. So there's a whole bunch of infrastructure costs to get work out what they are and what the impact of
Exactly,
that is.
and that's
Okay.
really as part of the feasibility study. We just
Yeah.
engage Senet who are looking at these sort of power options as well
Right.
at the moment. So
Okay.
they've been to site and.
Okay, so let's come back to this model of yours. So you're an incubator of sorts. You've got people like strategic partner Talaxis in here. They've got the ability to get up to 75% on Songwe, and similar sort of deal potentially in the making with the second project.
So the way the company is structured is we have a subsidiary called Lancaster Exploration.
Songwe sits under
and Songwe sits under that, and then we have another company called Magneto, which we set up to look at the sort of downstream technologies.
Yeah, and so Talaxis holds 24.5 of that.
Correct,
right
yeah.
now.
Correct.
But with the option of more,
increasing up to 49%.
with another £2 million.
With an additional £1 million. So £1 million has gone in
Right.
for 24.5%.
Got it. Okay.
And another $1 million to take it up to 49%. So we're looking at other opportunities for Magneto. We just announced a heads of terms with a group called Hypermag,
Right.
which is a UK-based group, and it was set up by some experts in the field of magnetic materials, a lot of experience in the industry, and that's looking at recycling.
Right. Okay. So again, on the strategy of incubator type structure is you've got low overheads. Presumably, your G&A at headco, topco is reasonably low. A few salaries and the old NED in there, no doubt, and consultant. What is the role that Talaxis is taking? Are they taking not just cash, but they're bringing expertise and knowledge, etc.? Are they going to be just looking after the market activity, or who's looking after the technical components of developing these assets?
Yeah, so we have a team of technical people we're working with on the feasibility study. So we've appointed Senet as the lead engineer. They're based in South Africa. And we're working with various groups, largely in South Africa, on the actual sort of feasibility study components.
Yep.
So Digby Wells on the environmental side of things, Epoch on the tailings, and Barra Consulting on the mining side of things. We're completing a lot of work at the moment in Australia on the processing. So really, most of the work has been done in Australia for that, and that sort of feeds into the feasibility study.
Okay.
And so really, with Talaxis, it's and Noble Group, the discussions and relationship is geared to the market side of things and the marketing, but also advice and in terms of the feasibility study, and we're working with individuals within Noble Group and Talaxis who are playing a role in the feasibility study as well.
Right. Okay. So I want to bring this back for investors, for retail investors, high net worth family offices. They understand where the upside is. Okay. I know you've talked about some of the deliverables coming up, but that's just deliverables. You've got to convert that into some sort of positive sentiment about the growth story for your company, right? So, because investments at project level, the people at project level not necessarily worried about what's going on at top K. So share price appreciation is going to come from what you think. Have you got plans for additional projects, or you think when you left with your 25% on Songwe, that's great. Let's just sit back and wait for that stellar growth that we're expecting? I mean, how are you looking forward?
What I would say is Talaxis also have a shareholding in the in Mkango as well, in the top company.
How much is that?
Of around 12%.
Right. Okay.
So they have a meaningful stake in the business, plus warrants to increase that stake.
Right. Okay.
So they have very good exposure to Mkango as well. But in terms of the real catalyst because really what we're looking to do is current market cap around 10 million, the implied value of that option to increase the interest to 75%, 150 million.
Mm-hmm.
So really, if we, our goal is to produce a very, very robust feasibility study, in which case Talaxis are strongly incentivized to exercise their option, and that'll crystallize an implied value for our remaining 25%. So really closing the gap between the 10 million and the 150 million implied from the equity investment.
And then
that's what we're...
game over after that.
Then Mkango will have a 25% free carried interest in a producing rare earth mine, and there's very few of those around outside China.
Sure, but it depends what happens with the rare earth prices. If they go stellar, there's going to be more and more. There's lots of small ones dotted around who haven't got the funding in place, nor are they capable of getting funding in place. So you've done quite well in that regard. But if the market changes, that situation changes. There will be more, assuming China doesn't retaliate in some way. But what are you going to do next?
So I think we have the producing. We'll have a producing rare earth mine. We have a downstream technology business. So if you're, producing a separated rare earths or a rare earths concentrate or a combination of the two, the further downstream you go, the more value that's added, and the greater the sort of market reach. So the reason we set up Magneto is to look at technologies which could enable us to get closer to the customer and participate in the supply chain all the way through to as far downstream as we can go.
So, fully integrated rare earths company, but you're focusing on what you've got. There's no bigger plans than that. You think that's?
I think we would, in terms of other rare earth projects, we would look at other rare earth projects if they're complementary to what we're doing at the moment, so we would look at other opportunities, particularly if we can add value to that rare earth project, or if it's covering a different has a different focus on different rare earths, for example. So we look at other opportunities.
Are you going to be raising capital anytime soon? No time soon. Don't need to.
No.
Okay, fine.
So the agreement we have with Talaxis covers feasibility costs and overheads in the top company.
Right, but you've got a G&A, you're employing people, you're taking a salary, so there's some cost there, but you don't foresee the need to. That's
covered through the agreement with Talaxis as well.
That's federal. Yeah. Oh right, okay.
Really
interesting.
We don't want to be in a position where we have to go back to the market at all.
Right.
So
no more dilution.
Correct. Yeah.
Right. So that's good news for a start. And so what I'm hearing is you're sitting and waiting for the feasibility to be completed, which is due when, do you think?
We're targeting next year, by the end of next year. Clearly,
Q4.
We're incentivized to get it done ASAP.
And it's not your money, so that's even better.
Well, we treat it as our money. I mean, it's, as I say, we're incentivized to get the best possible feasibility study we can.
Q4 2020, feasibility comes out. So between now and then, what are investors thinking? What should they be thinking?
So I think the key announcements that investors should be looking for is milestones on the processing, because those are key aspects of the feasibility study.
What are they? Go on.
And progress in Malawi on the ground, getting the environmental, social, health impact assessment done, and various other sort of milestones in the feasibility study.
Right. Okay. Because it's like when we speak to companies and they tell us milestones are coming up, the milestones come and they go, and nothing. It's just flat line. You're excited about it, but the market isn't excited about it. And it comes back to that question from right at the beginning, which is, how do you get people excited about this, or to even understand the importance of those catalysts? Because when share price doesn't move like you think it's going to, it's kind of quite disappointing. I mean, I've been your side of the fence, right? I know, and you're never quite sure why that is. But if you sort of anticipate the market not reacting, what do you think you would do now? And if if these announcements
I
come
think
out,
it's
people
a
don't
question
care.
it's a question of getting the message out there and better informing the market of what we're doing. Also looking at we're marketing internationally as well, I think just to generate that interest in the company.
Again, I think that's an interesting point you say, that telling people what you're doing and telling people why it benefits them are two different things, and that's what I'd think companies need to do more of. So it's not a case of traveling the world and telling the wrong message. It's focusing on what investors' needs are, institutional and retail. That's kind of what I'd like to see.
With rare earths, it's actually a pretty. The market story is actually when you boil it down to what if you believe in the electric vehicle story and that we're all going to be driving electric vehicles in the next 10, 20 years, then it's an absolute no-brainer, because it's the most efficient way of driving an electric vehicle. Say 30 million electric vehicles on the road, 30,000 tons additional demand.
Yeah,
and doubling of
I get all that, but the other side of that is I've got nickel companies telling me that, I've got graphite companies telling me that, I've got cobalt companies, lithium companies. Everyone's telling me the EV revolution is going to change the way that we operate. I get it, but it's how do you make money so that I can make money? Where you fit in that mix. I think that seems to be the bit people not.
I think the big difference with rare earths is that there are so few advanced stage projects that are really positioned
outside of China,
that are positioned for that growth. And I think so. I think that's one of the key messages. And what normally happens is. The market, the rare earth prices will start to move off the back of this additional demand, and there'll be only a very small handful of companies that will be in a position to supply into that market, because we're very fortunate to be working with an excellent partner who are funding us through to the stage where we'll be there when that.
You'll
that
understand what the
comes through.
economics look like, and then it's a question of just getting some debt in to be able to build the production out. Okay, brilliant. Thank you very much.
Excellent.
That was
Thank
fascinating. Fascinating. I do appreciate you coming in and telling our audience, our subscribers, that story. We hadn't come across you before. Very interested in the rare earth space. Like a lot of people, slightly confused by it, but I think that's really, really helped. Appreciate your time.
Thank you very much.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.